protecting Main Street from Wall Street. It's Chris Hoffman with Money Unleashed.
How much money do you put into your checking account from work on a month-to-month basis? It has a high probability that with your investable assets, we can replace that paycheck.
It's time to put you back in control of your money.
You've worked for 35 years. It's time for you to not stress. It's time for you to enjoy and live the retirement you want to live.
It's Money Unleashed with Chris Hoffman.
Welcome in to the Money Unleashed podcast with Chris Hoffman. We've got another great episode for you today, but before we get into it, make sure you're subscribed to Money Unleashed wherever you get your podcasts. New episodes come your way on Mondays and Fridays, as always, powered by the Hoffman Financial Group. Now let's jump into the show here, and Chris, let me ask you what I guess is almost a rhetorical question. Would it surprise you to know that when it comes to saving, that many, if not most, Americans don't actually know how much they need to set aside for retirement?
Yeah, it would, actually. I would concur with that because everything's built on a house of cards in a 401k plan. It's growth, and what the market gives you, the market can take away, and nobody can predict whether the market's going to go down next year or over the next 5 years, or whether we could have a lost decade like we did for the 10 years leading up to the Great Recession. So I agree. I think it's very difficult and very confusing and very uncertain for the average American to feel secure moving into retirement.
Now, I'm glad you brought some of those things up because a recent survey from Schwab found that 401k plan participants across the country now believe that they must save $1.9 million for retirement. It conducted 1,000 interviews with plan participants between the ages of 21 and 70 and gauged confidence levels on their retirement goals. Now, I know you believe that retirement confidence should not be based on reaching a so-called magic number. You're also a staunch proponent of building full financial plans because when everyone's retirement is going to be different, which is not a question, that's just the way it is, there's no single number that's going to fit everyone's circumstances, right?
Look, I like Schwab. I have no problem with that, but this survey is ridiculous. They conducted 1,000 interviews ranging in ages from 21 to 70. 21-year-olds are probably saying, I need $10, $20 million. And 70-year-olds are like, I just need $1 million. I need to make it through the next 20 years. So they should at least break it down into decades and say from 20 to 30, they project this and this. But again, it's projection. And also, Schwab did the study. Can Schwab tell these categories of clients by age how much exactly they should have to secure their retirement? It is not based on a number, folks, at all. So what if you have $500,000 in your portfolio, but you live in a $10 million house? I know that's a ridiculous example.
But we'll go with it.
But if you're 70 years old, you're probably going to downsize from the mansion, and that's an investable asset now that you can make money off of. What if you have $500,000 in your portfolio, but you have 20 rental properties? I have clients with that. And they are pulling in major amounts of income. And they can unwind some of those rental properties over time. So these studies and these surveys just drive me nuts, and they point everybody in the wrong direction. So folks, any study that tells you when you retire at age 60 or 65, and does this say when they're going to retire?
No, but I mean, you talk about the range. You got 21-year-olds on here that are 50 years away from retirement, conceivably, and 70-year-olds who may have been retired for a few years.
Yeah. And what does a 21-year-old know about projecting retirement in 50 years?
From my experience, not much.
No, that's why we don't work with them. So, I just think if Wall Street would stop talking about the amount of assets you need to have in your portfolio or the number of dollars you need to have in your portfolio, we could get back to more sound and stable and secure retirement planning. Stop messing with people's brains and their mindset that they need to work another 5 or 10 years to get to $1.9 million. And that number changes in every report we see based on who they're interviewing, where we are in the economy, where we are in the stock market, et cetera, where the inflation rates are. So when inflation spiked in 2022, I think, that number would have had to be higher, because the cost of living is astronomically higher under a 5 or 6% inflation rate. But now that inflation's back around 2%, that number comes down. Who can live like that? Who can analyze every year Oh, I need $1.2 million to retire. Oh, I need $1.9 million to retire. Oh, I'm retired currently. How do you increase your portfolio by $700,000 on a $1.2 million portfolio? It's not going to happen. So let's go back to the basics, folks. You need to study and you need to understand what is in your portfolio mix today. Then you need your financial advisory team to tell you how much you can generate in guaranteed income, how much you can generate in highly reliable income, and how much income is subject to maybe swings, not wild swings, but inconsistent swings. And they tell you that number. Then you and your husband or wife go back and you think on it. Take a month, take 2 months, take a year, and analyze, all right, how much do we spend? Pull the credit cards. Pull if you have any debt that you need to pay on. Just get a good handle on how much expenses you're living off of annually, and we can tie back to that, and you can see, okay, with this income plan, we're exceeding what we're expending. That's pretty good, but you need to bake that in, and that's why I really encourage folks to start planning in your mid-50s. Do not wait until you're 1 year away from retirement or 2 years away from retirement. You need more time to get comfortable with it and build your confidence. I mean, we can certainly do the plan if you're 1 year away from retirement, but it'll be harder for you, I believe, to retire and relax and to spend and enjoy retirement if you haven't planned and given yourself a few years to bake into it.
Now, waiting to the last minute might have been a strategy that worked for me in college when I was cramming for an exam and trying to get through that course. But with something as big as retirement, you don't want to leave it to chance. Just like no football team would want to expend most of the time on the clock hoping that at the end of the game that Hail Mary is going to come through and they're going to win in dramatic fashion. I mean, it's exciting when it happens, but I don't know, Chris, if I want to sign up for that ride when we're talking about something that can last as long as retirement.
No Hail Marys in retirement, no mistakes in retirement, planning, in writing, mapping. Let's make it as consistent as humanly possible. Let's make it as reliable as humanly possible so that you do not have to worry. There's a lot of worry and a lot of stress in life. And your working years, you got a lot on you. You've raised your family, you've worked very hard, you've saved. Now it's time for you to decompress and live your best life in the last 30 years plus of it. And I break it down by decades, as I mentioned before, but that's really the key to this. So you've got to have it all planned out. You have to have it in writing, and you need to decouple from what Wall Street has forced us into, which is 401k, stock portfolios only, grow, and then this head fake, if you would, on bonds protecting you. Bonds do not protect you, folks. They can go down in price. Matter of fact, I think they lost 20% or more in 2022 because interest rates were rising. How would you like to be stuck in a bond portfolio that lost 20% or 12%? I think AGG was down 12%. How would you like to lose 12% on your most conservative asset in your portfolio? That's not good. So, folks, decouple from the madness, build a full, diversified asset class, and you got to have an income plan, protection strategy, inflation hedges, and growth targets. It's not that complicated for a good financial advisory team to put all of that together and present it to you, and then you pick which plan. We can do 3, 4, 5 iterations with different scenarios. And when you see the one that works for you and the light bulb goes off, the stress should all but disappear, and you should feel very confident going into retirement.
I happen to know that good team. It's the Hoffman Financial Group. So get started today by sizing up where you stand. The Portfolio X-ray is a great way to do just that. The Hoffman Financial Group can take a look at where you stand right now and craft those strategies to help you grow and protect your money. But it all starts with taking that inventory. And the best part, it's a complimentary service, and you can get that valuable report and that information to keep. 404-341-6767 is the phone number, 404-341-6767, or unleashyourmoney.com. Just click on that Portfolio X-ray box. Now, to know how much to save, I think you have to kind of understand your needs, but the real key piece of the retirement puzzle is creating that income plan. We've talked about it some already on this show. The Associated Press offered some steps to forecasting your cash flow needs in retirement that could really benefit folks who are looking to get a little bit more dialed in. The first of these, I felt like, was creating a realistic baseline for your income, and I think you just kind of touched on that by taking the time to figure it out.
Yeah, and what's interesting is the Associated Press comes up with the right answer, but Schwab, not to pick on Schwab, I like him, good custodian of funds.
Murky.
Yeah, they want you to generate $1.9 million. Interesting. Something just occurred to me. Schwab makes money based on the size of your portfolio. If they charge an advisory fee, they don't want to work with you if you have $200,000. I'm not saying they won't. I'm not throwing any stones, but I mean, look at the way you're paying them. If you're paying your financial advisor 1% to manage your assets and you only have $100,000 in there, they're not going to make much income off of you. If you have $10 million in assets and they charge you 1% or 0.75 or 0.5, you're going to make a pretty healthy amount. The Associated Press, on the other hand, does not care because they're not managing these assets. So they are hitting the nail right on the head, creating a realistic baseline for your income. What a powerful statement. A realistic baseline for your income. The minimum baseline. This is what your portfolio and your financial life can all but guarantee you month over month for the rest of your life. That's a powerful number. That is more powerful than the 1.9 that everybody thinks between ages 21 and 70 need to have to retire successfully. And that's the difference between these reports that come out from financial wealth managers and the Associated Press. I'll go with the Associated Press on this one.
Well, the easiest way to get started with all of this is to make the phone call to Hoffman Financial Group, have the important conversations, be proactive, take advantage of the time you have right now to put that full financial plan in place, and let the Hoffman Financial Group show you how easy it can be to do just that. 404-341-6767 and online at unleashyourmoney.com. You can just click on that portfolio x-ray box to get started. This has been the Money Unleashed podcast with Chris Hoffman. We appreciate you checking us out. Make sure you subscribe wherever you get your podcasts, and we'll have new episodes coming your way every Monday and Friday. Chris Hoffman is an investment advisor representative of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV 2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV 2A, item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.